Well, hey, good evening. It is 12:10 a.m. Tuesday morning, actually Monday night here. I want to apologize for being late. I was on doing an auction with somebody earlier on my other channel, Patdees, with somebody. So I am part anyone that does investing does homework at night and tries to look for potential in stocks. So I'm going to show you stocks that I own and have bought for January 2020, stocks that I feel that even with a market correction should still be fine. And I want to walk you through why I think these stocks are good. And nobody's in the room right now, but if you're watching this on the replay, I appreciate it. So let me, you guys can subscribe to my channel. Be appreciate it. Appreciate it. So let's start out with the stock recommendations that I'm going to give for what I'm January, and these are based on Friday's close price. So let me share these to the stream, which will make me smaller. The first stock that I'm going to feature is Disney. DIS. Disney was 144.62. Even though if you look right now, the stock price was down today, closed at 143.88. We're going to go with Friday's close. Excuse me. Friday's closing price, just to keep it fair for all of them, not pick and choose. Well, this stock went up this day, stock went up. That's when I came up with the list, and that's what we're going to go with. Disney is trade. So the stock price was 462, and we think Disney is a great investment to buy here. The Disney Plus TV rollout and stuff, their earnings are going to come out around February the 6th, February the 8th. And if you see the stock is pulling back to a 50-day moving average, which is 144.17. Even if someone took a position right now, it's pretty much the low is 136. We would enter some sort of major issue that the market would break and drop down. But that's the first Disney, no matter what, is still going to do fine. They are a good company, and we think in the long term they're going to be fine. Now, with that being said, always keep in mind I am a trader, so even at 144.62, we buy it at. If the stock would jump 10 or 15% in a short term, we may sell it, and then we may wait for another correction and buy it back. As again, we here at Pat's Hall are traders. We are investors, but obviously we invest in stocks and options, but we look for opportunities. Basically, the rule of thumb that I try to do is I try to get a 30% return per year on the stock portfolios that I manage, which historically, if you could get 10 or 11% over the long term, that's good. I'm going to release another video. I've been behind a little bit releasing some of these videos as I actually just got back from Florida and been fighting a cold. So, but we're going to release a recap of how we did last year. I think our end result was 48%. The year before, about 15%. The year before that, 45%. So, how do we get a 30% return? Overall, we try to have the portfolio return 10% every 3 or 4 months. If we do that 3 times a year, that's how we get a 30% return. So Disney is the first featured stock. The next featured stock is going to be WBA. Now, as you can see here, I use stock charts, and I do use charts to kind of find supports in moving averages and stuff like that, and where I think is a good price to buy in. If you can see here, basically Walgreens, and I'm sharing the screen here. Let me, hey James, David, and Adam, how are you guys? Yeah, it's 12:15 here in Pennsylvania time, and James is Canada. Adam, I'm not sure where Dave lives. Adam is basically same time I am. this is what I do at night. I mean, I look. We just got done with an auction on a channel, and I look to and what's the market going to do tomorrow? What moves do I need to make that is going to grow my son's 401k and trade and do things that I do as far as and this is why I really want to grow. Georgia. Okay, so you're in the same time zone we are. I really want to focus on this channel also because we talk about reselling and buying something for $2 and selling it for $8. Wow. But once you get to a point in your life and you're never going to sell enough stuff on eBay to get super wealthy. If you look at like Rally Roots today, they did a video where they talked about other money that they make on affiliate links, YouTube. So they're doing multiple things. Part of what the long-term strategy people need to do is invest for the future. And investing for the future is investing into your 401k, investing for retirement. Now, a lot of people say they don't have money. If you live off a certain amount, start with the first thing to do is, and a lot of people get caught up into wanting to follow too many stocks. If you're trying to follow 15 or 20 stocks, in other words, invest into them, you can follow them because sometimes there may be buying opportunities. But if you're following 15 to 20 stocks that you're trying to invest in, you basically should just buy a mutual fund because that's going to be a diverse account for you that you can do. My strategy that I do is I really try to stick to about 8 stocks. And when we do buy them, as the portfolio increases, we buy a bigger position into that. So, for example, let's say, for example, you have $10,000. If you have 5 stocks, you're going to invest $2,000 into each. If you only want to do 4 stocks, you're going to invest $2,500 into each. Now, if you're a person that only has $2,000, you're going to rethink that. You're not going to. Maybe in the beginning you might put $400 into each and have $2,000. But a lot of times you're not, because you're not going to be able to get the best gains. That $2,000 I would probably divide up among 3 stocks, and I would pick the best 3 out of those 5. A lot of times in the beginning, though, I recommend until you probably get to a $4,000 or $5,000 level is to keep the money into mutual funds. In other words, don't go and buy Home Depot, Disney, Ford. And 7, 8 companies with 2,000 saying I got 200 this, when you could just do that and maximize your risk and your return into a mutual fund. But once you get, and here's the point. When my son's account got to a point where it was $7,000, I kept $2,000 in a mutual fund and I pulled $5,000 out and I started buying individual stocks for him. And I've grown his account, and it is a big focus for me. Because as that account grows, I need to kind of constantly keep reminded that, hey, I need to grow this account. So if I want to grow that account at 30% a year, yes, I'm worried about a correction too. A correction is coming sometime. So, anyone needs to be careful as far as how much they're putting in all at one time. And it all depends what age you are. The rule of thumb that they say out there is basically take 100, subtract your age, and that's how much money you should have in the stock market. So if you're 50 years old, you should have 50% of your investments into the stock market, with other things being in CDs, bonds, maybe real estate, gold, things like that. Hey, Craig, thanks for stopping in. I'm doing a 2020 January stock picks video. The first stock that we talked about was Disney. Now, the next stock that I'm going to focus on is WBA, which is Walgreens. Now, Walgreens is a conservative stock here. As you can see here on the chart, it did drop with their earnings because as they've bought in some Rite Aid locations and as they're expanding and doing their clinics, they are, in other words, the growth is not tremendous, but they are trading at such a cheap, basically the price that they are trading at, they pay for that company themselves basically within 10 years. So their PE is very cheap. No matter what's going to happen as far as the economy, people are always going to need prescriptions. They're going to adapt and adopt to people getting sick and the need for pharmaceutical clinicals and obviously because of more and more people being on healthcare, and there's always still going to be need. Hi, Bill. There's is closing stores, I believe. Yeah, they have, but they're still making money. Walgreens was 54.22. It has a 3%. Some talk maybe about them going private by fund, but anybody who's going to do that is about $54 billion. If it does go private, it could go private for around $65, but that's not why I'm telling you to invest into it. As far as it's a core solid holding. They are making the stock. They're going to make around $5.40. So it's trading at 10 times earnings, which is cheap in this market. Where you got many stocks that are trading, crazy. The next stock I'm going to talk about is Tapestry, TPR. TPR that owns Coach. They had a name change, and maybe that was part of the problem too. But they are a luxury item. As you can see, the chart here, and I don't know if you could see. David, that's fine. I honestly, I understand what you're saying. I wouldn't buy Philip Morris either because of cigarettes. But at the same time, now you say it's hard for you to buy a company that you wouldn't patronize. I don't like drugstores like Walgreens or CVS and stuff like that. But if there's a lot of money that's legitimately made, not like, for example, selling, cigarettes or, vaping or something like that, you're kind of closing yourself out on a potential. I remember back a long time ago where I was so dead set against Amazon, and I'm like, I'm not going to buy stuff from them. It's not right how they're closing stores. It was just business. And as long as they're not hurt, I mean, obviously they hurt small business, but I should have invested it back in 2000. I remember when the stock was $5 and I turned it away. Now, if anybody's watching this on the replay, you see me talking. I am interacting with some of the chat that is on the side. So if you guys are watching the replay, you can type looking at the live chat and look at that. So this company, though, if you look at it from and I do follow charts. Basically, it's been since September. It looks like it missed earnings here back in August, but then when it broke, it's been since September. So it's been basing. It's been pretty much at a $25 to $28. Now the $27.43, it was actually up 67 cents today. And if you see what's happening is it's starting to break out. They make high end, like I said, purses 20. Let's look at a longer term chart here. I really think now we own this, and we actually own some options in a separate account. And this stock back last year in 2019 had a high of around $38, and back in 2018 had a high of $50. So basically the stock's been cut in half. And as you can see now, it broke above a moving average just in the last 2 days. That's sometimes a good sign. That means that any people that had bought in that moving average, the sellers are pretty much gone here. That really probably has the potential to go to 35 quickly. And we're talking, if that goes to 35, that could be a 20% return just like that in 1 month. So there's where I talk about those 10% moves. Sometimes you get a stock where it moves 20%. And 6%, like Disney, maybe temporary, but it doesn't matter. Overall, the portfolio is still going to grow at 30% a year. The way that, right, exactly, Adam. Yes, you go to Sam's Club. So that was the third stock. So let me recap real quick. Disney at 144.62 was a buy. Walgreens WBA 54.22 was a buy. And Tapestry, TPR at 27.43 was a buy. The next stock that I'm focused, and these are stocks I personally own, or the family owns. I manage my son's 401k, and my youngest son just took a job with General Dynamics in October, and he has a 401k, so I will be managing his But right now he's going into a mutual fund, and we will eventually be going into selective stocks ourselves. Now, this site here, obviously, you could sign up. I just take the free charts. That's why I don't get paid for any of these ads that are running on stockcharts.com. That's obviously they're making money off of it. I'm just using the site that to look at charts. Viacom basically is CBS, Viacom CBS. CBS and Viacom just recently merged together. And there's going to be a lot of synergies there together with the money that they're going to save. They are also a very cheap market cap. I mean, the market cap is let me grab my other device. Hold up real quick. Sorry about that. Instead of bouncing from screen to screen, Viacom. Now, I use on my app, I use CNBC, and I follow the market every day. Viacom on Friday was $40.31. Viacom's market cap is $25 billion. They are CBS, and they've merged together. They're supposed to save, with them merging together, about $500 million a year. So that right away will fall to the bottom line. And the stock trades at basically 8 times earnings. I mean, it's supposed to earn about $5 a share. And I think this year, with the elections coming up, what do you think? All that money that people do the commercials and stuff and do, they're going to advertise on those stations that CBS will benefit from. So they're going to do that stock last year. Now they have a 52-week high and low of 35 to 54. So the stock is 40.31. I honestly think this stock could reach 55 within the next 12 months. And based on that, you're talking roughly a 40% return. So that's why, again, when I talk, now this may be a stock, to be honest, that might go up 2, might go down 3. It also might be, does Viacom own MTV? Yes, they do. This is a stock that actually Barron's featured actually also as their pick of the year. So there's another thing is, as these companies like Amazon, Netflix, and stuff are looking for more, they own, the last count, and don't quote me, but the last on Viacom, they own something like 4,000, I think it was 4,000 movies. Now, you take 4,000 movies, they own 4,000 movies. Something like just the movies alone, are something worth like $4 or $5 billion. I mean, think about that, and the revenue that comes in and the things that they're doing. Amazon's working with studios to develop stuff for streaming. So the streaming is here. They're not going to, Disney Plus just came on and they're giving Netflix some competition. Disney Plus owns Hulu now, but definitely CBS, and they're doing the sports and doing different things. They are, I definitely think this stock is definitely going to be a winner. And now, that's not to say, let's say it goes up 25% in the next 3 months. So let's say it goes from 40.31 to 50.51 in that area. 50. I may sell it, and then let's say it corrects back down to 46. Then I'll turn around and buy it back again, and may sell it again. I've done that several times where I've tweaked out another 5 or 6% by, and people will sometimes say that's timing the market. Yeah, you're right. It may drop. It may hit that. It may also then drop. And as I sell a stock and keep a certain amount of, like right now in the account, we're holding some cash. So I'm thinking that even if I buy it like at 40.31, if it drops to 37 again, we're buying it. If you look at the blue line there, which is the line 39.61, and when it was down there in December, and a lot of times people say, oh, why was it down in December? What happens is people have tax loss selling that they can offset any gains they had, and then if you see, some people then bought it right back because they wanted to position it in the mutual fund. if 44 will be resistance because that's the 200-day moving average. If we break above that, then the stock could clearly go to $50. I think, and I really do see. I think really within the next 6 to 12 months, it will go to $50. So, Viacom is stock number 4 that I recommend. Now, the next stock I'm going to recommend is Qualcomm. Qualcomm is obviously they make the computer chips. They had settled a patent lawsuit with Apple last year, and their stock was around 60. And it just went crazy. I mean, yeah, right there. See it, 66, and basically shot up into November into 92, and now it's back. It went back down to 80. You see at that blue support line. Now it's been riding up. It's been struggling the last 2 or 3 days. It seems like it gets to 92, it gets sellers. And why does that happen? Because think of the people that bought it back in November at 92. Some of those people are happy to break even. So they sell it and they get out of it, and they feel, well, maybe the market is going to go in correction. Maybe I don't want to be in it right now. And you also then got pressure from people that bought it here at 80 and it rose to 92 and they're sitting on a profit. So you got people that broke even here, and then you got people that made money here. So the combination of these two sellers up in here and here, and then even sellers that sometimes, like, because it gets traded every day, will get out of the position. Qualcomm is going to be one with the 5G rollout, which is going to be tremendous. That they have the basically the foothold, the largest of the 5G chips that are going into the phones and stuff like that. Once China kind of gets on board, and we'll see what happens Wednesday with the market. Maybe the market sells off Wednesday or Thursday when the deal gets signed, because the market has been good the last 2 or 3 weeks. So maybe that will kind of be like, buying the rumor, selling the news type mentality. A lot of times that's what people do. They'll buy something based on a rumor, and then once the news does come out, they will sell the stock. So you guys are watching this in the replay. I'd appreciate you guys comment below and share this. And so those are the 5 stocks that I'm for January. Disney at 144.62, Walgreens 54.22, Tapestry TPR, it makes the Coach handbags, 27.43, Viacom VIAC $40.31, and Qualcomm $90.27. If you were gonna, for example, if you had $10,000 and say, well, how much would you invest? Maybe right now, if you don't feel comfortable, put $1,000 in each, 1,000, 2,000, and then slowly over the next 2 or 3 months, add a little bit, 200 or 300, 400. Now, with commissions being free at a lot of the brokers, such as Ameritrade, E-Trade, and stuff, Schwab, you don't have that issue that, sometimes your commissions can eat up your buys and sells and stuff like that. Is actually maybe created more of an opportunity for traders to buy and sell stocks, because right away you don't have $14 to $30 typically that people were paying to buy and sell a stock. So if there's any stocks in the side chat, I'm going to be here for probably about 7 more minutes that anybody would have any questions about. I mean, Tesla, if anyone follows Tesla, oh my God, Tesla was up basically $50 today. Man, if you traded options, you could have got rich. I think we are hitting a top in the certain things because things have gotten crazy. If you look at the chart here, this green, and I want to show you how this is why I look at charts. This green means it's overbought, relative strength. See how it was overbought and then it kind of corrected a little bit. And now it's still, but it's basically been overbought almost at 380. But once it broke out, see how it curved up, and once it broke out of that range, $525. Let's look at a year's chart on Tesla. I mean, look at this. Look at this stock. You could have bought it just in 177 last January. See how it went to 380 and then corrected? See that's remember what I said about the 375? Well, that was the price, the 380, the 387. Once it broke above that, man, it was just clear right up to 525. Would I touch it now? Absolutely not. I think Tesla eventually here could, yeah, it could see 550, 600, but when it corrects, stocks have the tendency to take what they call the escalator up, but the elevator down, which an elevator moves much faster than a escalator. So you need to be very, very careful on a price. What do you think they will split? I'm not sure if they will split. So there's always a cost add-in into doing that, and sometimes they don't want companies don't split anymore because they don't want people investing in if they're worried about the stock price as far as they don't care. I mean, look at Google, look at Amazon. Amazon, what, 1900, and they don't care. There's a cost into doing that and issuing more shares and doing things like that. So those are the 5 stocks. I am going to do another video. I'm hoping still this week. We got some issues, medical issues that we need to address with family, but I appreciate you guys watching. This is Pat's Hall. What does Hall stand for? Health and Wealth. I really like to get the opportunity to get more people, and you know what? It doesn't cost you nothing to watch and learn. So if you guys could comment below, even afterwards, and and stocks that you're interested in, and these ones are kind of hard to do pre-recorded. Mary Pelletier, thank you. So I went live with doing this tonight, as it's almost 12:36 here and stuff like that. But just be if you're worried about the stock market correction, don't forget, you don't have to sell. You can sell some of your mutual funds holdings and hold it into the money market side. You don't have to take the money out. Hold it into the money market side, and then when things do kind of level out, you can go back up. The price you can go get back in and jump in. These stocks that I recommended, I feel pretty secure that even if the market does correct, you're only looking basically at maybe a 8 to 10% downside risk on those. Not like some of these where I've seen it before. I've seen Amazon go to 2,000, and when the market corrects 10%, those type of beta stocks that move more than others, they'll correct 30 or 40%. Yes, I know it's been a long day. I am more of a night person and stuff like that, but I was actually up this morning. I probably have a 17-hour day in today, and so it's long, and I watch the market every day, and I'm actually surprised that the market is as strong as it has been the last 7 weeks. Professional traders that do things have made a lot of money. I wish I had the capital to kind of do it, and because there would have been. When I was driving down to Florida, Amazon, you could have bought an option that if you knew what you were doing, you could have put 1,000 and turned it into 50,000 just in 2 days, just by trading options and stuff like that. So, but I want to thank everybody for stopping by, and I appreciate the support. Again, recap: Disney, Walgreens, Tapestry, Qualcomm, and Viacom, or Viacom CBS, are the ones that I talked about, and I did talk about Tesla. If you guys have any questions afterwards and you want to comment below and message me, I will respond, and I appreciate everybody's time. If you guys can give me a thumbs up, I want to thank you, and you guys have a great night. All right? Thanks.